Your money might not be as safe as you think. Bank outages are happening more often, caused by cyberattacks, technical problems, and financial stress. Many have already been locked out of their accounts when they needed access the most. What if the next outage affects your bank? This is a real warning from experts. In this video, we'll explore the risks to our banking system, how these outages could impact your life, and the steps you need to take now to protect your money. Bank outages are becoming an increasing concern, especially when coupled with economic instability. Richard Wolff, an economist, warns that the situation we face is worse than a simple recession. What's coming is worse than a recession, he says. This statement highlights the broader consequences of these disruptions on our daily lives. Bank outages, whether caused by technical failures or natural disasters, point to a deeper problem within the financial system. Wolff notes that these issues stem from a long-term economic crisis. Capitalism today is in its final stages. It is not just a downturn, it's a system-wide failure. The global pandemic revealed the vulnerability of financial institutions. In March 2020, Chase Bank experienced technical outages that left users unable to access their accounts for days. This caused widespread panic, with people unable to pay bills, access funds, or check balances, showing just how fragile our interconnected financial systems are. But it's not just about technology. Wolff emphasizes that banks and their systems are fundamentally unstable, with over 87% of banks reporting successful cyber attacks last year. The risks are growing. Cyber attacks can lock customers out of their accounts, freeze transactions, and trigger broader economic ripple effects. Banks hold more sensitive data than ever, so breaches can erode public trust and cause long-lasting damage. Consider the 2008 financial crisis. Reckless banking practices led to bankruptcies, job losses, and a loss of faith in financial institutions. Today we face even more complex challenges: cyber attacks, natural disasters, and systemic failures that go beyond market crashes. What's coming is a perfect storm of economic failure and technological vulnerability, says Wolff. If banks and financial systems fail, the impact will extend far beyond lost access to funds. It will affect jobs, housing, businesses, and communities. In short, the future holds more than just a potential recession. If we don't address these vulnerabilities now, we could face something far more devastating. Warnings from financial experts are growing louder, highlighting the increasing risks within the global economy. Richard Wolff, a respected economist, has been vocal about the severity of the crisis we face. He warns, stressing that we're not just headed into a typical economic downturn, but toward a deeper systemic collapse that could affect all aspects of society. Warren Buffett, the Oracle of Omaha, has consistently emphasized the importance of liquidity in uncertain times. Cash is like oxygen. You don't notice it 99% of the time, but when it's absent, it's the only thing you notice, he says. This analogy is especially telling as his company, Berkshire Hathaway, now holds a record cash reserve of over $325 billion. This massive cash cushion is not just a sign of Buffett's cautious approach, but a reflection of the fragile state of the financial system. In uncertain times, liquidity becomes critical for survival, and Buffett's reserves indicate his foresight about economic instability. Barry Stern, CEO of Starwood Capital, also highlights growing threats within the financial sector, particularly pointing to $1.9 trillion in commercial loans that are nearing default. This pressure is further exacerbated by rising interest rates, which could trigger a cascade of defaults, weakening financial stability even more. The consequences could be severe, with businesses and individuals alike facing a tightening of credit and liquidity. These warnings echo Richard Wolff's broader assessment. What we are seeing is the end of a system, not a temporary economic hiccup. The combination of rising debt levels, defaults, and systemic vulnerabilities suggests that we are not just facing a recession, but the potential unraveling of an economic system that has failed to adapt to modern challenges. If these issues aren't addressed, the impact will be far worse than anyone anticipates. Understanding the ripple effects of bank outages is crucial, especially when considering how deeply these disruptions can affect the economy. Richard Wolff, an economist, highlighting that the consequences of systemic failures are far-reaching and far worse than typical economic downturns. When banks experience outages, the impact is felt across all sectors. Transactions stop, businesses are unable to function properly, and employees may experience delays in receiving paychecks. These aren't just minor inconveniences. They represent a deep breakdown in trust and stability. A perfect example of this happened in March 2020, when Chase Bank experienced a major outage, locking millions of customers out of their accounts. For days, people couldn't access their funds, pay bills, or make transfers. This situation not only caused frustration, but also showcased how reliant we are on digital banking systems. The disruption didn't just affect individuals, it paralyzed entire businesses and industries that depend on instant transactions to operate. As Wolff states, we are seeing a system that has been hollowed out, and these outages are a symptom of a much larger problem. Beyond the inconvenience, bank outages can have even more serious consequences. These disruptions erode public confidence in the banking system, leading to broader financial instability. If people begin to lose trust in their financial institutions, the resulting panic can escalate quickly, leading to an economic collapse. Warren Buffett famously said, "It takes 20 years to build a reputation and 5 minutes to ruin it," emphasizing how swiftly trust can be destroyed in times of crisis. When banks can't meet basic demands, the entire economy is at risk. These outages don't just freeze money, they freeze entire systems, making it harder for businesses and people to move forward. This is why Wolff's warning is so important. The challenges we face today aren't just about a recession, they signal a much larger, more catastrophic crisis ahead. In times of crisis, having cash on hand is one of the simplest yet most effective ways to ensure financial security. Bank outages caused by cyberattacks, technical failures, or natural disasters can instantly limit your access to digital funds. Here are several key points why you should stock up on cash and ensure you're ready for any disruption. Cash ensures you can meet essential needs, such as buying food or fuel during digital outages or network disruptions. Having cash available means you won't be left stranded when digital systems fail. Imagine being unable to access your bank account after a major cyber attack or technical failure. During these times, having physical cash available is crucial to survive. Digital accounts can be compromised, but cash provides a secure, tangible backup. Recent events, such as the 2020 Chase Bank outage, have shown just how vulnerable digital systems can be. In times of uncertainty, cash is the lifeline you can hold on to, as Wolff suggests, especially when banks and financial systems are under attack. When power outages disrupt digital payments, cash becomes indispensable. Think back to hurricanes, where entire regions are without power for days or even weeks. People couldn't use credit cards or mobile payment apps. Only cash could keep transactions flowing. In these situations, cash ensures that vital purchases can still be made, providing a sense of control when systems break down. While excessive cash holdings can erode in value due to inflation, a reasonable reserve helps you stay prepared without sacrificing long-term growth. Wolff argues, This is not just a market cycle, it's a structural crisis. And in uncertain times, holding some cash provides both security and flexibility. Being prepared with cash means you are less vulnerable when systems fail, offering you the peace of mind that digital systems simply can't guarantee during times of crisis. In an age where we rely heavily on digital banking, it's crucial to be prepared for the unexpected. Bank outages can occur at any time, but taking proactive steps can ensure you're financially secure no matter what. Here are some key ways to prepare. Experts recommend having enough cash to cover at least 2 weeks of essential expenses. This isn't about withdrawing everything, but ensuring you have a practical safety net. During outages, especially when digital systems fail due to cyberattacks or natural disasters, cash provides immediate access to your funds. Think back to the 2020 Chase Bank outage when millions were locked out of their accounts. In those moments, access to cash meant survival for many. Don't rely solely on one bank. Spread your assets across multiple institutions and consider alternatives like credit unions or digital wallets. Relying on a single bank during times of crisis can leave you vulnerable, as seen during the 2008 financial crisis, when many banks failed and customers faced sudden disruptions. Wolf emphasizes, the system is fragile, and it's time we recognize the cracks before they widen. Diversifying reduces your exposure to these risks. Regularly monitor your bank's financial health and stay updated on cybersecurity news. Tools like the FDIC's Bank Find can help you track the stability of financial institutions. Knowing the health of your bank allows you to act quickly if signs of trouble arise, minimizing potential losses. In addition to cash, consider prepaid debit cards, credit cards, and digital currencies. These can serve as backups during outages. As we've seen with recent banking disruptions, having a variety of payment options ensures you're not left stranded. Being proactive in preparing for potential outages can help protect you from the broader economic instability that Richard Wolff warns about, ensuring your financial security no matter what happens. It's natural to feel concerned about the risks of bank outages and financial instability, but the key is preparation. Financial systems are built to weather challenges, but individual preparedness can significantly enhance resilience during times of crisis. Richard Wolff signaled that the threats we face go beyond the typical economic cycles, potentially leading to deeper systemic issues. Rather than succumbing to fear, it's important to adopt a balanced approach to preparedness. Warren Buffett, a master of navigating financial uncertainty, wisely noted, "Risk comes from not knowing what you're doing." This is especially true in an environment where digital systems are becoming more vulnerable to cyber attacks and technical failures. Take, for instance, the 2020 Chase Bank outage, which caused chaos as millions couldn't access their accounts. Had customers been more prepared by diversifying their banking relationships or having cash reserves, they could have weathered the storm more easily. While it's easy to feel anxious about the future, Wolff reminds us we are witnessing the decline of a system that has failed to evolve. The current economic instability, coupled with risks like cyber attacks and natural disasters, highlights the need for proactive steps. Whether it's building an emergency fund, diversifying financial assets, or staying informed about potential threats, being prepared ensures that you're not caught off guard. By staying informed and taking practical steps, you can face disruptions with confidence rather than fear. It's about understanding the risks and acting wisely to reduce them, allowing you to protect your finances no matter what challenges lie ahead. Preparedness isn't just about surviving a crisis. It's about navigating it effectively. The increasing risk of bank outages is a stark reminder of the fragility of our interconnected financial systems. As we've seen, disruptions in banking systems aren't just inconvenient. They represent a deeper vulnerability within the current economic landscape. Preparing isn't about succumbing to fear. It's about strategic, informed planning. Building a cash reserve, diversifying your financial tools, and staying informed are simple yet effective ways to safeguard your financial security in times of crisis. Warren Buffett's advice to "do not save what is left after spending, but spend what is left after saving" emphasizes the importance of preparation. By adopting a proactive mindset and planning ahead, you can ensure that your financial future remains secure, even when faced with unexpected disruptions. If you found this video insightful, share it with your friends and family. Let's spread awareness and build a community that's ready for any financial challenge. Don't wait for the crisis to hit. Prepare today. Don't forget to like, comment, and subscribe for more tips on protecting your financial future. Check out our other videos on financial preparedness and stay ahead of the curve. Stay safe, stay informed, and take control of your financial destiny.